Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about SoFi Technologies SOFI stock, and we're going to be talking about the reverse stock split and what that means for investors as well as their stock price. We're also going to talk about what analysts and professionals think about the current SOFI stock price. We're going to be going over their low-end price predictions and their high-end price targets so we can determine if this stock is still a good buying opportunity right now. Then we're going to go over 6 points about their reverse stock split that is either going to be negative or positive for current shareholders. And if you haven't invested into SoFi Technologies yet, these are going to be very important for you to know. And then we're going to move on to talking about the insider buying that is still happening within SoFi Technologies, which is always fantastic news. Particularly, the CEO has continuously bought shares, and he has still bought shares 3 different times in the last 9 days. And then with all of this information and all of these news updates, we are then going to determine if right now is a good buying opportunity to either average down our average cost or even start a position in SoFi Technology stock, and how much longer it's going to take until we see a bounce back in the stock price. So for more videos like this one, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's stories. So SoFi Technologies is a fintech company or a financial technology company that offers their customers an all-in-one inclusive app that gives them access to many different types of financial services and financial products. Currently, the SoFi stock price is trading for around $6.20 per share, which is substantially lower than the low-end analyst price target for the next 12 months, which is $7, and it's also lower than the high-end price prediction among analysts for the next 12 months, which comes in at $22. So just from analysts' ratings, we can say that this company is clearly a good buying opportunity right now, but that's just what analysts are saying, and we need to take what they're saying with a giant grain of salt. Now, the most recent news for SoFi Technologies is actually an upcoming shareholder meeting on July 12th, where SoFi Technologies is going to have their shareholders vote on whether or not to grant their board of directors authority to conduct a reverse stock split. And if they are given that authority to implement a reverse stock split over the next year, we could see a reverse stock split actually take place. Now, stock splits in general can actually draw a lot of interest into a particular stock on the market. However, reverse stock splits normally do not have a positive reflection on the stock price. So what is this stock split going to mean for SoFi Technologies in particular? Well, first, I want to make it very clear that even if shareholders do grant the board of directors the ability to perform a reverse stock split, this does not necessarily mean the board of directors will perform a reverse stock split. It just means that they're going to be given the authority and have access to actually implement a reverse stock split within the next year. But it doesn't mean that they have to implement this reverse stock split. If you are not familiar with a reverse stock split, let's imagine you own 9 SoFi shares at around $8 each. That means that you own around $72 worth of SoFi Technologies. And let's say that the board of directors chooses to implement a reverse stock split, and this stock split is going to be a reverse stock split 1-for-3. And this means that you are going to exchange your 9 shares at $8 each for 3 shares, each worth around $24 each. This means that your total equity in the company will still remain $72 in total. However, instead of 9 shares, you're only going to have 3 shares. So the amount per share is going to increase, but the overall share count that you own will decrease. And these are going to completely offset each other to where your total equity is literally identical. Now, as of right now, we don't know what type of reverse stock split that the board of directors would implement if they are given the green light from their shareholders to potentially have the authority to implement a reverse stock split. However, the ratios for reverse splits and even regular stock splits are normally either a 1-for-2 split or a 1-for-10 split. And I would actually put my money on a 1-for-5 stock split in this particular instance. Even if shareholders do give the board of directors the ability to perform a stock split, it could be months before they actually decide to implement this, because it's going to be very risky for the overall stock, especially a reverse stock split. So it begs the question, what are the benefits of a reverse stock split? Well, there are 3 main reasons for a reverse stock split, and I'm going to comment on each of these. The first one is it's going to appeal to more institutional investors, because institutional investors are very risk averse in many cases, and a low stock price does not communicate a very very healthy company. That's why a higher stock price, and if we do the reverse stock split, each share will be worth more. Therefore, a higher share price is also going to increase the amount of institutional investors in some instances. It also may usher more analyst coverage for this particular company because, like we said earlier, this is going to draw a lot of attention to this particular stock. Another reason why SoFi might want to do this is because they believe that a reverse stock split will, quote, improve the perception of SoFi's common stock as an investment security, end quote. So this is linked clearly to the first one, but I honestly think that you're playing somewhat of a dangerous game here, and I don't agree with the second reason for this stock split, and I personally don't think they need to do a stock split at all. But then again, I'm not going to be opposed to it either, because I think even if it drags down the price further over the long term, I'm just going to have a better buying opportunity because I'm in this company for the long term. But the reason why this is a double-edged sword is that if you do implement a reverse stock split and you gain more institutional investors, the company might lose out on retail investors such as you and I. And then finally, the last reason for a reverse stock split is it may attract more attention to the particular company, which is pretty good for the overall stock price. So these are the three main reasons for a reverse stock split. Now, again, like I said earlier, I wouldn't advocate for a reverse stock split, but if it's happening, I honestly don't really care because I think fundamentally SoFi Technologies is a strong company, which we will talk about later in this video. Now, while this is going on, the CEO of SoFi Technologies has continuously bought into the SOFI stock. Mainly, his main investments are all below $8 per share, which should signal retail investors as well as institutional investors that if you have this company below $8, you have a phenomenal average price. Recently, the CEO of SoFi Technologies has bought around 59,872 shares of SoFi Technologies in the month of June. So why is he doing this? Well, clearly it's because he thinks that the company is undervalued right now, which is why he has bought the SOFI stock price on 3 different occasions in the month of June, which is absolutely insane. In total, year to date, the CEO has purchased shares of SoFi Technologies on 14 separate occasions, which is very bullish and positive for retail investors to see. This means that the leadership and CEO of the company thinks that the company is worth far more than what it's trading at right now, and that's why he's buying. And although many insiders and directors can sell stock for a plethora of reasons, normally the only reason insiders and the CEO would buy stock within the company that they are managing is because they think that the long-term future of the stock is going to be much higher than what it's worth right now. For instance, right now the stock price is trading at around $6.20. However, if I'm willing to hold this company for 10 years and I think it's going to go as high as $50, then that's clearly going to be a fantastic hold. And that's the mindset that the company's CEO is in right now. And remember, he's buying these shares as the SOFI stock price has fallen around 30% since the start of the year. So even though the stock price is headed downward, he is using this as a phenomenal buying opportunity, and I tend to agree with him. Even with President Joe Biden potentially issuing a partial student loan forgiveness worth up to $10,000 for federal student loan borrowers for individuals who make less than $125,000 per year, SoFi Technologies is not even concerned with this. Because the CEO says, with or without the student loan forgiveness, SoFi will be fine either way. So clearly the CEO as well as directors are very confident in SoFi's overall business model and fundamentals. So on June 1st, the CEO purchased around 21,215 shares worth $7.07 per share. 5 days later, he bought an additional 21,750 shares at an average price of $6.89. And then on June 8th, he bought another 16,907 shares. So overall, this is phenomenal news. However, a bearish naysayer may say that maybe Anthony Noto buying up these shares are pre-arranged in a 10b5-1 plan. However, I want to quote from this article that says that none of the CEO's June purchases were transacted via a pre-arranged 10b5-1 plan. This shows that he finds finds the current price of SoFi to be reasonable, end quote. And I 100% agree with the author of this particular article. So what does this mean for retail investors like us? Well, it means three things. One, if you haven't initiated a position in SoFi Technologies, remember to go and do your own research to determine if this company is going to fit with your portfolio. This is going to be a risky long-term growth play that I personally am in myself. Secondly, it gives us the advantage to average down our average cost. But thirdly, this should only happen if you are not already overexposed to this company. And I have a personal policy that I don't overexpose myself more than 5% for a particular company regarding my overall portfolio weight. So buying SoFi shares at a deep discount right now is going to give us a unique buying opportunity in this stock. Also, some analysts believe that investors have underestimated the amount of earnings potential that SoFi Technologies is projected to achieve over the long term. So let's talk about that. Despite the ongoing technology and growth sell-off in the stock market right now, many investors and analysts actually say that there is going to be a huge turnaround coming in the next year and a half. Although many growth stocks have seen a major hit, many of the stocks are trading at a very attractive price point right now, including SoFi Technologies, ticker symbol SOFI. Like we talked about earlier, the CEO and multiple directors within the company say that the company is currently undervalued right now, and they're not just saying that, they are literally putting their money where their mouth is, and they are buying this stock while it is cheap. So clearly, there is huge upside potential in this particular company. Similarly, analysts agree with this current sentiment that the directors are trying to issue out. For instance, analyst Kevin Baker from Piper Sandler boosted and increased his SoFi stock rating to overweight from a neutral rating because he believes that their earnings potential for the future is absolutely amazing. So he says it's an attractive option for those who are planning to invest into the SoFi stock. On top of that, they have very good positive financials and fundamentals overall, which is something I personally am excited about. And with such an innovative company trading at such a cheap valuation, how could we ignore this phenomenal buying opportunity? But now let's talk about their financials. Their revenue in the first quarter was around $321.7 million, which beat Wall Street's estimates. And this just adds to the bullish sentiment, even though the stock price is not currently reflecting this very positive development. For the full year of 2022, they are anticipated to bring in $1.5 billion, with a net loss of around 46 cents per share. And this is honestly not that bad because, according to current projections, in the year of 2024, this company is supposed to be profitable on a GAAP basis, and management is extremely confident that they can continue their current momentum and achieve that current forecast. However, SoFi Technologies does not come without risk. Like I said earlier, this is a single risky growth company that investors should plan to hold for the long term. So overall, this company is absolutely phenomenal. And I want to remind investors that companies like SoFi Technologies will not stay at these extremely cheap valuations. They might hang around here for maybe a year or two, but past that, the opportunity will eventually end to buy the stock at an extreme discount. Now, that's not to say that the stock price couldn't continue to fall. Yes, there's always that option where the company could continuously become cheaper. But for me personally, if I'm not overexposed by 5%, I'm going to continuously average down my average cost basis because I know it's going to rebound sometime in the future. And if it doesn't, who cares? I only lost around 5%, and I'm going to use this money to tax loss harvest and then invest into another growth company. So I would love to hear what your thoughts are on this company. Remember to go and smash that like button for more videos like this one. Subscribe if you are new, and I will see you in the next YT video.